Welcome back. In this video, we'll start to discuss Chapter 13, Dividend Policy. There is no mini exercise associated with this video, but let's talk about dividends. So if you think about the two things that a firm can do with the profits that it generates, that with its net income, it can reinvest that money as retained earnings and try to generate even more profits in future periods, or it can pay that money out to shareholders as a dividend, right? Return that money to the owners of the corporation. And so, when should a company reinvest its profits and when should it pay out dividends? One idea is, well, if a firm doesn't have any great new ideas, new positive NPV projects, then the profits that it earns, it should probably just pay those out to shareholders as a dividend. But if they can do something productive, then maybe it makes sense to reinvest as retained earnings. So we'll look a little bit more closely at the way that firms pay out money to shareholders, the owners of the corporation. Dividends in the old days, firms would mail checks to shareholders, but nowadays it's electronic. Another way that a firm can pay out money to shareholders is by repurchasing its stock, buying back shares of stock from some shareholders. We'll talk about that a little bit more. And then some questions, in terms of the goal of the corporations, what's better for shareholders? Actually, if we look at this bottom one first, right? Is there some optimal percentage of net income that a firm should pay out to shareholders? We'll think about that. And then alternatively, another thing to think about is suppose a firm wants to pay out $100 million to the owners of the corporation, right? Should it pay $100 million worth of dividends, or should it repurchase $100 million worth of common stock, or should it do some of each? I recommend you take a look at the article that this link points to, where Microsoft gives some background on a dividend and a share repurchase program that they're going to start. But let's look a little more closely at dividends and share repurchases over time. If you look at this graph, it looks like dividends have increased kind of slowly and steadily with some, little dips here and there. But then share repurchases, buybacks have gotten much bigger over the last 20 years or so. And they're also more volatile. You can see they sort of track the market a little more closely. So one thing I want you to understand about dividends is sort of a timeline of how they get paid out. There's some important dates in the life of a dividend that gets paid. And let's look at a timeline that sort of highlights this, right? So a firm's top managers will meet with the board of directors of the firm to decide how much dividend to pay out, usually on a quarterly basis. And so here's a timeline of Union Pacific, right? So on May 6th, they announced that they're going to pay a dividend. That's called the declaration date, right? And then who receives that dividend? Because people are buying and selling shares of Union Pacific every single day that the market's open. So to determine who receives the dividend, like which shareholders, on the announcement date, they specified the record date. So on May 28th, they'll look at the list of shareholders as of May 28th. And whoever's on that list, whoever owned those shares of stock on May 28th, that's who gets the dividend, okay? And then we see that it gets paid on July 1st, right? And then the X date is actually important, and it's related to the record date. So the X date, if we go back and look, is 2 business days before the record date. In the US, when you buy a share of stock, it takes 2 business days for the list of shareholders to be updated. So the X date, if you buy a share of stock on May 26th, you won't be a shareholder of record. You won't be on the shareholder list until May 29th, because it takes 2 full business days to get for the list to update for some reason. I feel like they could update it quicker these days, but they don't. So anyway, anyone who buys a share of Union Pacific stock starting on May 26th, the X date, does not receive the dividend. And so, the last day that you can buy Union Pacific stock and still receive the dividend is the day before the X date, May 25th, assuming it's not a holiday. So let's take a look at that in terms of a real dividend briefly. Here is a firm, Caterpillar Inc. So on Friday, April 17th, a few days ago, there is a dividend whose X date is last Friday, right? And it's a dividend amount of $1.03 per share. It'll be paid on May 20th. And so you can see the record date and the X date, 2 business days separate them because Friday, April 17th, then we've got the weekend, and then the record date is Tuesday, April 20th. Right, so 2 business days separate them. And so the last day that you could have bought in Caterpillar stock and still received this dividend on May 20th was the day before the X date, May 16th. So a little background on the timeline and lifespan of a dividend. Those dates are going to be important to me to understand. And in the next video, we'll spend a little bit more time talking about how payout policy, how much dividends a firm pays, whether that affects the value of the firm or the goal of the corporation. So let's talk about that next. Thanks as always.